Hi everyone, Paul here and welcome to another Bitcoin update. So the question on everyone's lips after a couple of tough days is, have we reached the bottom yet? And unfortunately the answer is no. And the reason for that is that we really haven't seen two critical things that I think we need to see before we can start to think that a bottom is starting to form. And those two things are effectively the whales, the large wallets stepping in and actually starting to accumulate in the market. And the other thing is deleveraging. Now, we haven't seen either of those two things yet. And until we see those things, I don't really think that we can start to assume that a bottom is starting to take place. And I think we'll still see some more selling before that happens. So let's jump in, have a quick look at the daily charts, and then go through some more stats before we wrap up. Looking at our daily chart, we can see the last 3 days of price action, and we're sitting here just around this 42,000 mark. So you can see we had this big push down, went past this spike low down here, the previous lower low, and we're now starting to form a little bit of a pattern here at about 42,000. So not a lot of action here today. And if we look at the 4-hour chart, you can just see there's effectively a fight going on here over this line. So we have sellers pushing it down, being bought back up, sellers pushing it back down again. Now, the size of these bars, some people could interpret this as, I guess, dwindling volatility. People draw wedges and all those sorts of weird things. I think that the reality of this situation is that no one is showing any strength at the moment. The buyers aren't showing any strength, and sellers aren't showing any strength. And until we see a push one way or the other, we're not going to really know who wins that fight. Sounds relatively straightforward. But I think the thing that we're really looking for is a push lower. So I'll just grab this here. What we're really looking for is a push lower. And I think that will shake out the last of the weekends. And I'll get to why I think that is a little bit more in a moment. So if we go back to the daily chart, we can still see here that this volatility reading is still quite low. So there is still a chance that we will see a significant move of some sort. This level here is still critical. And obviously what we're looking for at some point is a closing above here. So I think what we're looking at is we'll have a push down here before this happens. We could see potentially a push below this mark and then one up. That's possible as well. But I don't think it really matters too much. And again, we'll sort of go into some more detail as to why I think that will be the case. As long as we don't close below here, I think it's fine. What you often will see is an overshoot, similar to like what we had on the 4th of December there, where it really shoots and then there's strong buying after that shot down. So as long as we get something like that, a push down below these levels isn't really something I'm too worried about. It's really more about where it closes. Let's jump in and have a look at some different data points which should help us to prepare for what we think might happen in the next couple of days. Starting off with the Fear and Greed Index, you can see that we've really hit this historically low reading of 10 here. So that's a reading that we haven't had for a significant amount of time. I'll go into that in just a second. So you can see we had an 18 yesterday, and really that's just been a cluster of really high or really low readings on the Greed and Fear Index. And if you look down here at this historical chart, you can see that this level here, if we draw our eyes across, we really don't get down there very often. Really rarely. And of particular note is that period during mid-2021 where we were down there quite a bit before the market came back. So this could be indicative of what we might see, but I guess what is worth keeping in mind is that as part of a market cycle, we do get these low points and the market does recover. So the next few days will be critical, and I guess we'll just sort of see how that works out. Now, the other interesting thing is if we look at the Fear and Greed Index on a overlay of the actual Bitcoin price, you can't quite see it as well in this chart, but there's actually these gaps here. So whilst the market's falling, the actual Fear and Greed Index itself, the data points is gapping. So it's the market's dropping and that fear reading is going down, which obviously means that the fear is increasing and it's gapping. So I think that's quite interesting, is that we're at a pretty important inflection point in the market at the moment. Now, the first thing I want to talk about is wallet sizes. So I think the wallet sizes is really important, because what's happening in the wallet sizes gives us the best indication of if that buying is coming into the market or not. Now, as an overall summary, the basic answer is that it's not. What we can see here in the wallet sizes of just over 1 Bitcoin, which is obviously the retail investors. I've said before in other videos, the not very pleasant term that people in the market use is the dumb money. It is just sort of slowly trending upwards. So, this is the people who would be doing, I guess, dollar cost averaging and that sort of thing, and just slowly trying to grow a position over time. So that's not necessarily a bad thing. That's good, I guess, to have retail participation in the market, but this type of participation isn't actually going to drive the market. It's not going to push the market in any direction significantly. So if we look at the next sort of size, which is over 10 Bitcoin, which we're starting to get into, much more serious investors at this point, you can see that the market's been coming down, and there's been some sort of little peaks and so on, but you would say a rough trend would be that the wallets, like the participation here, has been going down, hasn't been going up. So there's no evidence here that these wallet sizes are accumulating at the moment. And then we have the same sort of behavior here now with the much more significant investors of over 100 Bitcoin. It's pretty flat too. I mean, it's not quite as choppy as the over 10s, but it's pretty flat. So there's no evidence again that they're participating. And then the same again for these really enormous wallets. There's just no evidence that they're participating in the market. And so my view of this is that until we can see those big wallets stepping into the market and starting to accumulate, there's really no evidence of a bottom being in place. So that's, in my mind, is one of the really key critical things that I'm looking for. And until I see that happen, I just don't believe that we have a bottom forming. So I think the thing that we'll need to see is that sort of push down that I talked about before. So another significant thrust lower. And it's at that point that I think, when we have real market exhaustion, we'll have some really nasty capitulation bars on the chart. That's when you'll see these big wallets, the smart money start to step into the market. So, I'll be keeping a close eye on this, and obviously if it changes, I'll include that on any future updates. So the other thing I'm looking for is deleveraging. So we haven't seen any evidence really at the moment that the market is deleveraging. And we'll jump into some charts to sort of depict where we are in terms of leverage within the market. So this is specifically looking at futures. I'm not really too worried about the options market at the moment, with expiration still a little way away. I think the futures market is really a bigger driver. And so if we look here at open interest, the things that I think is worth noting is that in previous periods when the market has really pulled back hard, you get leverage go with it. So you get, open interest go with it, which is obviously the number of contracts that are open in the marketplace at the time, and that pulls back. So you can see that here in May. You can see it here, which is really significant on that 4th of December. But as I've said in previous videos, the thing that was interesting about that was that the deleveraging really didn't last long, and you had open interest quickly climb back up again, not quite as significant as these previous levels, but still pretty high. And then with the market falling again, and you have to think this drop from 50 down to 40 would really starting to cause some pain for those leverage long positions. We just haven't seen that decrease in open interest at all. Now, one of the charts that people look at is this estimated leverage ratio, and what that is effectively the ratio of futures positions to the on exchange balances. So it's not really an accurate measure, and you can see here that at the moment it's really reading a like crazy high level, like much higher than it's been. I couldn't find data showing it being any higher at any point before. I think this is probably a little bit misleading, so I wouldn't put a lot of weight behind this, but it is just interesting to note. So it still gives us the feeling that there's still a lot of leverage in the market. Now, what I think is actually happening in the marketplace, and this is just a theory, I've sort of seen a couple of different data points to suggest that this might be true, is that on the 4th of December, when we had that big leverage clean out, that was mostly all the collateralized leverage. So when you trade futures and most other derivatives products, you can collateralize your positions with, or you can post collateral in two different ways. You can either use, if you're trading equities, you could put equities up, or you can put cash up. And then obviously in crypto, you can put, your Bitcoin up, or you can put cash up. And I think what we saw in that 4th of December clean out was a clean out of all the collateralized margin players. And I think what we're left with now is those who are collateralized with cash, because obviously the problem that you have in a market that's falling if you hold collateral is you get this double whammy effect. If you're, say, leverage to the longs, leverage to the upside, your collateral is also pegged to the upside as well. So if the market's falling, the value of your collateral is falling while your positions are also falling. So you're getting that double hit, and that's how people get wiped out really quickly. So what I suspect has happened is that on the 4th of December, you had a lot of collateralized positions get cleaned out, and maybe they didn't just get liquidated, maybe they actually flipped. So they sold their collateral, which obviously would have accelerated the fall further to the downside, and then they recollateralized with that cash and then levered back up again. And so that could explain why we've still got a lot of open interest in the market, and even though the market's been falling, we haven't seen a liquidation of those long positions, or like sort of what we would normally expect. And because the exchange balances just have historically been falling, if you think about it, we've got more open positions, lower exchange balances, you're going to have this estimated leverage ratio not really being reflective of the true position. So that's why I think this looks like that. It still doesn't give us a good picture, but at least explains why this ratio might be the way it is. But I think the short story of all of that is that basically there's still too much leverage in the market, and it just may be collateralized with cash. And so what that means is that we're going to need to see probably a significant push lower to trigger a liquidation event for those cash collateralized positions. So only time will really tell, but I suspect that's what's going on. Now, the other interesting thing that I think is worth looking at is funding rates. And, really funding rates will be, I think, a good indicator for us that a bottom is in. So you can see here in past pullbacks that when the funding rates flipped, you can see it flips here, that this is a good signal that that basically the bottom is starting to form, or at least we've reached the end of the really significant downtrend in the selling. So you can see it here, again here, and then in early December. So that big liquidation event we had on the 4th. So we just haven't seen that yet. There's also predictive funding rates. Now, I don't really know. I haven't done enough looking into it to see if there's good evidence that the predictive ones are actually valuable, but there are some predictive charts out there that's showing that there's an expectation that we'll see that funding rate flip here. So I don't know if that's the case, if that'll come true or not. I prefer to work with real figures, and so at the moment we just can't see that. So I don't think that bottoms in, and until we see that deleveraging, we're not going to have a bottom in the market. And then lastly, this is the liquidation. So this is a spike here is what we're wanting to see, and that's going to give us the strongest indication that the leverage has been flushed from the system. So you can see there was our 4th of December. Most of that was all leverage longs. Now you can see there is a clustering here, kind of similar to what you had here. And in aggregate, I mentioned in a previous video, this was a pretty significant number, but we really want to see a flush. We want to see a big flush that basically just punches all of these leverage traders out. And then the open interest not to immediately swing back. We want to see that come back more gradually. And, really what we're talking about with that scenario is that, we have these leverage players who are really on the knife edge. And so what we really want to see, which will be, the trigger point in the market, and when we know that bottom's forming, is that we'll see a transfer of wealth from the leverage margin traders to those long, those whale wallets. And so that's really what I'm looking for. So we need to see those two things for that to occur in the marketplace. So to summarize, basically where we are is that we're trading around this 42,000 mark, and what we have is a battle between, our leverage, like longs and shorts, and the leverage players and the big wallets, the whales, are the ones who are basically going to have the fight. So really what I'm hoping to see, and I think will be a good sign for us, is that we have said that thrust down, and it could be a pretty nasty one where it shoots down like this before we shoot up again. And really what that's going to tell us is that we have a flush of leverage, so we get this, big capitulation bar here like we had on the 4th of December, and that will show us that the leverage positions are getting squeezed out. So all those leverage longs are going to get flushed out, will spike low, and that'll feel really nasty. And that's a cascade event. You get a bit of a squeeze. We'll probably come through some key levels, some round numbers. 41,000. Maybe 40.5, something like that, and that will create this sort of cascade event where people start getting liquidated. There could, as I said before, there could be cash margin, but we could still have some collateralized position holders in there as well. That creates a cascade, or people start getting stopped out. Market, shoots to the downside, and then we have those wallets sitting there waiting, just ready to hoover up all of that final capitulation selling, and then we'll start to get, probably come back into this zone, and then we'll see a better consolidation before we sort of shoot upwards. So that's what I'm expecting. I still think that this volatility number here is something to keep an eye on. That's, I guess, what's going to is going to be the fuel for that big push downwards, and then potentially a shot back up. So a similar sort of candle to the one that we have had there. So I hope that's helpful. Picking bottoms is almost impossible, but I think those are the two key things that we really need to see in the market before we can even start to anticipate that a bottom's form. So, those are wallets, especially the big wallets, starting to accumulate, and a final flush out of that long leverage. So I'll be keeping an eye on it. Obviously, if it happens, expect to see another video from me. Hope today was helpful, and I'll see you next time.